I've read the exchange rulebooks, the ones people argue about but rarely open, and the first thing that hits you is a specific phrase that shows up over and over: disorderly markets. If markets become disorderly, the board can issue emergency directives and adjust how the market functions in real time. The rules aren't always fixed in a crisis. Second, they state plainly, we are not a source of supply. You are not supposed to treat futures exchanges as your warehouse. It's a mechanism to keep paper and physical prices aligned. If you push the system into a stress event, they can simply declare trading for liquidation only. Contracts get paired off, positions settled financially. One side writes a check. You don't have a guaranteed right to take physical delivery in unlimited size just because you hold paper exposure. You're not going to break the exchange that way. But that doesn't mean silver isn't tight. Silver scarcity is real because it has drivers that gold simply doesn't have. And right now, they're all pushing in the same direction. Gold is money. It's the best form of money, but it's not useful for much else. Silver is different. Silver is used in wiring, electronics, and defense applications. In this entire AI build-out, the data centers, the processors, the infrastructure, all of it requires silver. It is a critical input across that entire technology stack. So silver has two demand engines, the precious metals vector and the industrial input vector. And right now, the story people are watching is that both are rising together. Then there are the rumors. I've heard reports that China is hoarding silver. Why? Look at the logic. They're competing with the US in the AI race and sensitive tech sectors. If China wants to keep pace in electric vehicles and AI hardware, they need inputs. Silver is one of them. The theory is they're securing physical supply for future inventory. Now, on price, I think silver continues higher. If we see gold move to significantly higher levels over time, silver is not just going to stay at $30. It doesn't work that way. Silver is going to come along for the ride. It's hitching its wagon to the same macro horse as gold, so to speak. But silver has additional tailwinds that gold doesn't have, because it is a critical industrial metal in a modern technology economy. Gold's value is monetary, silver is both. Will there be pullbacks? Of course. Hedge funds trade volatility. If they're up 10% in 3 days, they take profit. That sharp drop doesn't tell you the peak, it tells you traders are involved. The real driver is that central banks have become net buyers again. Countries like Russia and China are increasing reserves, creating a kind of informal floor under the market. After Russian reserves were frozen, sovereign managers started looking for assets that can't be frozen as easily. That brings more attention to gold and, by extension, silver. So while you won't break the exchange tomorrow, the setup for silver is powerful. Between the industrial squeeze and the monetary shift, I'm comfortable saying we're going a lot higher.